Hello everybody, it's me Teresa Perrin, and I want to discuss ticker KIRK with you because they have earnings tomorrow before market open. So let's get started. Please remember nothing I say is financial advice and always do your own DD. Okay, so Kirkland Homes sets their third quarter earnings conference call for December 2nd at 9 a.m. So guys, tomorrow morning we will see earnings on Kirkland, and this is a very heavily shorted stock, which is why I'm bringing it to your attention, because if earnings are good, then it could potentially run. Currently, the ownership is broken down into 41.76% institutions, 11.6% insiders, and 46.64% others, which would be us, retail. Currently, it's looking like we are in a downtrend at the moment. However, medium term, they're saying that this is going to go up. And it's been in a long-term downtrend, which is why you see the long down. We do have a bearish signal short-term at the moment. But like I said, tomorrow could change everything. Based on the three analysts that rate this, it is given a buy rating. One gives it a strong buy, one gives it a regular buy, and one gives it a hold. The price targets range between $4.50 and $15, with the average being $9.17. Currently, we're trading under the low of $4.50. I took this morning when the price was $3.84. So it could potentially be higher or lower. I have not looked as of market close. So this is based on yesterday, but I just wanted to show you that the free float in the stock was 11.27 million, and the 52-week low was $2.98 and a 52-week high of $22.86. And as you can see, the volume yesterday was more than normal, and it likely was today just due to the fact that they have earnings tomorrow. Looking at Fintel, it tells us that the short interest is 17.28% with 6.62 days to cover. Currently, as of this morning, there were only 300 shares available to borrow. And the cost to borrow is somewhere between it's 10.72%. And the short volume ratio for the stock has been between 28.29% and 63.38%. Yesterday was 48.39%. So as you can see, it's all over the board. And I think a lot of that's probably based on volume, because it feels like they've been trying to hold the stock down for a while, because I've had my eyes on it, because I think it could potentially be a stock that I may consider adding to my portfolio. It is beat down very, very hard right now. And failure to deliver, guys, do not come into play with this stock. Now, just for comparison, I want to see what Fintel shows us for ownership. Please remember that Fintel's information is only as good as when it's reported. Oftentimes, the information is not up to date. And remember that most companies do not have to report their short interest, only if they're like managing certain kinds of people's funds, like let's say the state of California's pension fund. They would have to disclose a short position. So right now, according to Fintel, there's 120 total institutions invested in this stock. 112 of them are long, one of them is short, and 7 have a long-short combo. So that likely means they're hedging their bets. Institutional shares account for 46.79%, and insider ownership is 44.15%. So if you add those together, it's over 90% owned by toots and insiders, which is larger than what we saw according to Webull, which was headed at 53%. So, you know, somewhere between 53 and 90% owned by institution and insiders, guys, is pretty large, which is why I feel confident in making an investment in the stock if I decide to do so. I want to see what earnings show me first, but that's why I wanted to bring it to your attention. And also because it could potentially have a run tomorrow if earnings are good, or it could be a good short if earnings are bad. So keep that in mind, and thank you so much for watching. Have a fabulous rest of your night.